What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. I do these videos Monday through Friday, 5 days a week. We're going to look at the daily time frame and the 30-minute time frame. Going to map out some support and resistance areas, kind of forecast where the price action might take place. Let's get into it. All right, so we are here on the daily time frame. If it's your first time here and you're wondering what these big red and green boxes are, the red one is an area of resistance. We call that the bear's camp, and this green rectangle right down here is an area of support. We call that the bull's camp. Let's go ahead and zoom in on the current price action. All right, so it looks like the price struggled to make it back up to that 32.35 entrance into the bear's camp. Also the 32.50 level, which I kind of had my sights on. That was an area of resistance that I was planning on shorting. Now, I did actually manage to do a short scalp today, which I will get into here shortly when we hop onto the 30-minute time frame. But ultimately, the day stayed within this rising wedge pattern. It kind of bounced right from that trend line and started moving higher throughout the day. An area of support that we mapped out on yesterday's video was 3,200. It didn't look like the price could get quite below it. Looks like we really just bounced from that, and we'll see more when we get into the 30-minute time frame on that. But 3,200 held. Now, in this rising wedge pattern, what I want to point out here that I find kind of interesting is that from the base, now this is just kind of a rule of thumb. Like when I say that there might be a pullback coming from this type of rising wedge, how far can it get pulled back? Some people might, if I don't say it, some people might just be like, oh, the pullback's going to crash down to, stock market all-time lows. That's not what I really mean. What I mean is, especially in this type of environment where the stock market's at, where I say buy the dip, sell the rip, if we do get this actually breaks down and is a true rising wedge pattern, where can the potential pullback take place to potentially buy the dip? And that I wanted to point out right here. So a rule of thumb, if you just look at the base of the opening of this rising wedge pattern, it goes from right there to there, and you can technically take this to see where a break might happen. And if we do that, say if it breaks from up this point or up here, really it's not like this gigantic pullback. It's really just above the 3,100 level. And we've been talking about the 3,100 level being a pretty strong area of support. So 3080 is right here. We'll move up just a little bit. So 3,100, really, that's right where the bottom is. So right there, 3,100. So if we do get the pullback in the next couple of days, and this actually is a rising wedge pattern, I wouldn't be surprised to see the price come down and bounce from that 3,100. If you look at the 50-day period moving average, as the price action is above it every single day, the 50 period moving average moves higher and higher. So I wouldn't be surprised to see the 200 period like this, the price to break down and bounce from this 3,100 area. So from a long perspective, if you wanted to buy the dip, that 3,100 to 3,080 level, that right there looks like a pretty powerful zone to buy the dip. Now, like I said, that is just a rule of thumb on the pullbacks. Now, ultimately, the day did pull back today to 3,200, and we saw kind of really, once we get into the 30-minute time frame, you'll see the price action, but it went pretty much sideways and then ended up just a little bit higher on the day. Ultimately, like I said, it stayed within this rising wedge, so I'm keeping the pattern there till further notice. Really, to see a big move up, you'd have to see it break above this island reversal pattern here, and then the next high, which was that 32.50 to 32.65 range. You're going to have to see the price close above that. And if it does close above that and stays up there for a couple of days, what you want to see if you are bullish is a back test to that area, and then it bounced from that point. That would give more bullish confirmation that the price is continuing to move higher. Because if I zoom out of the chart to give you a more illustrative purpose of what I mean by like pulling back and then moving higher, you can just see from the very bottom right here in the March low, the mid-March low, it pulled up, it bounced from an area of support, which was right here at 24.50, let's call it, and then it bounced up and then it pulled back to another area of support. Notice just the previous history, and then it did the same thing, and it's kind of just moving itself up. So I wouldn't be surprised to see that pullback hit a main area of supports, which would be that 3080, the top of this camp to 3100, and then kind of move higher from there. It's earnings week, earnings season, so there's going to be a lot more volatility than usual. Keep that in mind. Ultimately, the price channel that the price is in right now is the 3250 to 3000. So that is the zone that it's in. It's right now at the top. If the price doesn't get overextended to this 3250 and kind of just goes sideways and builds up, that to me is not a short opportunity personally. I mean, it might play out good, but if it just kind of goes sideways like this to 3250, that means that it's really kind of the bulls are putting in higher lows, and it would be, to me, look more like some sort of a launch pad taking place where the price kind of goes sideways, it's trying to get through, and then boom, it bursts through. Now, ultimately, as of right this point on the daily time frame, it looks like a double top. So if I were to, put a line here, that was one top, and you got another top right over here. So that right there could be a double top where we see that pullback. So keep that in mind. If it does reach the 3250 on an overextended move, that might be a good opportunity. Like I said, that's my target for a potential short opportunity, a short scalp, an intraday trade, maybe not a multi-day hold, but potentially could be. Just depends on what really is taking place at that particular point in time. Let's hop into the 30-minute time frame just to kind of see what took place on the price action today. Okay, so here is the 30-minute time frame. Each one of these candles represents 30 minutes of data. The blue vertical line that I just threw up on the screen right there is where the day began. Today's July 16th. And as you can see, we had that hammer candle form, and that was kind of one signal saying, hey, that long upper wick technically means that more bears pressed in at the end of closing bell. And we did get that follow through, that gap down today. That's where the price opened up, came down to this trend line, which is the rising wedge. And really, ultimately, the price just went sideways. So we had the 3200 level as an area of support. And that is going to continue to be the level of support that we're going to have to keep our eyes on. Notice the 50 period moving average that we mentioned moved in and just above the 3200 area, and the price held right there. So the 50 period moving average is a level of support. You have 3200, which is clearly a defined level of support now. As far as resistance goes, I think the level of resistance that we're going to want to still keep an eye on is going to be that 3235 up to 3200. So I'm going to make those red just so you can see them. So nothing new there as far as the resistance goes. You can technically move the resistance and have a little bit lower of a resistance, probably right around, this 3215 level, but that's kind of right where the price is sitting at 3215. So I'm just going to say no on that. You could also say that it could be where the gap window is right here. It gapped down right, and then it technically didn't fully fill, but it did reach up to there and started getting rejected. So that 3221 technically is an area of resistance. But I mean, me personally, because the price is so close, just to clean up the chart, I'm just going to have a more wider range. Not to say that that's incorrect or wrong, and you can't make a really good trade on that, but just personal opinion, I want this one that has more data points supporting it, and then the 3250 as well. So as far as trading opportunities go, I'm going to keep my eye on the 3250, but I'm going to do it with a little bit more hesitation because we didn't get that overextended move like I explained on the daily. Up here at 32.35 might make for a great opportunity to catch a little scalp trade. If we get the price to move up into that range, you might be able to do a short little buy-in there, good risk versus reward trade, have a stop loss and maybe catch it down, a little pullback to the downside. So that might make for a good opportunity. This 3200 level is holding, but this is kind of what scares me. It's making kind of stair steps downwards. As you can see, it's kind of boom, boom like this. So ultimately, I mean, 3200 level looks like it could potentially getting weaker, where the price might boom and then eventually break down through it. So if that actually is the case, that would represent that this falling wedge might be actually true pattern. If we get a close below 3200 and some continuation to the downside, that's where we might see the price go to that 3100 level which we mentioned. Last thing I want to point out for the day is just pay close attention to the MACD, looking like it kind of wants to start curling back over to the upside. And one of the last 30-minute candles of the day was very bullish. And, we have somewhat of, like I said, that pullback. Then you have this one red, big bearish body, which is very bearish. But then the bulls just step right up and then engulf the entire candle. And then the last 30 minutes, it was an indecision candle, right? So it's a doji. the price doesn't know where it wants to go, you know, it basically opens up and closes in the very same exact area. So the price kind of went up and then it went down and then it came back up. So overall, I mean, we had some bullish momentum on this last hour with some indecision. So ultimately, it's very hard to follow through on where the price might go. Those are the three levels that we want to keep an eye on though heading into tomorrow. We got that 32.35, 32.50 areas of resistance and 3200 as support. If the support breaks, that might make for a good opportunity for a flush trade where you can enter in just right when it flushes down and potentially scalp a little right down here to 3183, 3180. You just need to kind of keep in mind where the next area of support is if it broke down. And if we were to map that out, I would say, yeah, right here at this 3180 level, maybe a little bit higher, you know, yeah, just say 3180 just for rounding purposes would be an area of support to watch out for. So if you are shorting into the market or shorting like a quick scalp, you know, keep that in mind. Today, what I wanted to show you really quick was on the SPY chart. I want to show you a little pattern. This is just a little bonus. I traded in the last 10 minutes of the trading day on the 1 minute time frame. I on my Instagram account, if you don't follow me on Instagram, you can go to @figuringoutmoney and you can kind of watch that. But really, it was ignore this big red candle because that's what I kind of predicted. But as you can see, the price was getting up here and then it started getting toppy and moved over to the downside. And this was kind of my thought process. It started moving up, got rejected. These two longer wicks right here is telling me that, hey, the bears, once the bulls step up, the bears step up even further. And then we had this big red candle almost try to break through that 30, 20, 60 level. And then once again, it struggled to get higher and higher. And ultimately, that's when I went on Instagram saying, hey, this is looking pretty weak. I'm looking for a scalping opportunity right here on the 1 minute time frame. We're looking at the 1 minute. So each one of these candles is 1 minute. And then boom, just a quick hit to the downside resulting in here. I'll show up with a screenshot. I made about 8% on that move. It was $28, and then I followed up. Now, if you haven't or not on my Instagram, you can watch the story. It's going to be live for 24 hours, then it goes away as per usual. But I said, you know, it was $28 profit within about 30 seconds, and a lot of people might think, well, that's nothing. But you got to understand the context of making $28 in 30 seconds. $28 in 30 seconds is actually, when you multiply that out, it's quite a bit of money. And if you were to take $28 consistently on every trading day, say if there's 220 trading sessions within a year, I give or take a little bit, but if you times that by 25, it's about $5,500 in a year. So you can make $5,500 relatively easy. And I was doing that with just a small principal of my money. So I was risking, I mean, I wasn't risking much, but the total money in that trade was about $600. And in a quick 30 seconds, I got 5 to 8% or whatever it was in profits on that equity in that trade. So not too bad. Keep that in mind. Like if you're making short little profits here and there, just make sure that they're consistent and that you're monitoring your risk. And if you have the ability and want to take on the additional risk, you know, by all means do it. Just know that this is a long game. You need to be consistent with your profit taking over the course of many, many years, not just hit it and strike it big once and never come back, because ultimately if you strike it big once, you're going to want to do it again when those funds run dry. All right, that is all I have for you on today's S&P 500 technical analysis video. I will be back here tomorrow. See you then.